Welcome to Trading Nation. I'm Morgan Brennan, and let's take a look at the Nasdaq Composite, up 29% in 2017. It's on pace for its sixth straight year of gains. And get this, that's the longest yearly winning streak since the one ending in 1980. So are there more gains ahead? Well, Matt Maley is with Miller Tabak, and Max Wolff is with Phoenix Group. Gentlemen, thanks for joining us today.
Great to be here.
Max, I'll start with you. Are there more gains to be had in the Nasdaq?
So great to be here, Morgan, and happy holidays. Yeah, we think it's probably going to push a little bit higher into early 2018. Look, the riskier you are and the more you grow, the better you do. That's the kind of rule of the big bounce back here from 2009. We would say that both tech and the rally overall is getting really long in the tooth. So somewhere toward the middle point of 2018, we think this is going to run out of steam. But we're not quite there yet. And tech is expensive, but at least it's growing, and there's plenty else you could buy that's expensive and not growing.
And Matt, certainly to this idea of getting long in the tooth, we've seen a major run up in the FANG stocks. It seems to be where all the focus has been, with 50% gains for companies like Facebook and Apple. What is your take? What are you looking at in terms of some of these tech stocks?
Well, I mean, one of the things we have to look at is that, you know, as much as the FANGs were certainly a key leadership area of the tech group, we also got a lot of leadership out of the semiconductor stocks. I mean, look at the SOX Semiconductor Index. At its November highs, it was up 50%. But the problem is they've begun to diverge a little bit. They're starting to sell off a little bit when you see the semiconductor indexes come down. And this is particularly worrisome. I mean, I'm going to overstate it, but you know, we see a stock like Micron Technologies, which is one of the best performing stocks of the year, was up over 120%, over 125% in November. It started to roll over a little bit as well, and yet the problem is it hasn't been able to bounce back strongly, even though they reported fabulous earnings, great revenues, and great guidance. And yet the stock, after it rallied a little bit after that report, it's rolled back over and sold off another 7%. Now, that's on the negative side. On the positive side, we have, you know, people aren't as bullish on the group as they were a few months ago. So it kind of reminds me of what happened this last, you know, over the summer when the group started to sell off a little bit, the semis and the technologies. Everybody thought, oh, these are going to bail out of tech and buy the laggards like oil. But then the group rallied very strongly, and the Nasdaq rallied another 20% to where we are now. So I'm kind of talking on both sides of my mouth right now. But what I'm really trying to say is that keep an eye on those semiconductor stocks. They're at a key technical juncture. Whichever way they break out of their recent range is going to be very important. If it breaks out to the upside, it should be positive. It breaks down and makes a lower low following a lower high. That's going to be quite negative. So I guess my point is, if we can see a big move in the semiconductor stocks, that's going to be important for the semis, for the technology stocks, and for the Nasdaq overall. I mean, I guess my point is, you want to know what's going to happen to the Nasdaq in the first 6 months of the year? Watch to see what the semiconductor stocks do over the first 4 or 5 weeks of the year.
Okay, so semiconductors as an indicator for the broader technology sector. Just to sort of wrap this up, Max, given the gains we have seen in tech this year, is there profit taking to be had right now? Is that
absolutely
okay?
So it's a great question, but I think we're going to see people try to do their profit taking in the lower tax, more lenient tax environment that everybody sort of now knows is coming next year. And part of the reason that so much rallied as much as it did is nobody wanted to sell at the higher tax rate going into this big tax deal. So I do think that major tailwind that we saw all through really the entirety of 2017 is going to turn into a little bit of a headwind in 2018. And we do expect 2018 to be a much less good year for risk assets overall, but we think they'll probably stay up through the first quarter, only because if you're a big tech company, you're going to repatriate money at a super discount, and you're going to be one of the American companies in a good global position, and you're probably going to do a little bit better with the weakening of the dollar, and that's going to be enough to power you relatively higher, even though we think that a lot of the steam is coming off this uphill charge, especially toward the end of the first quarter 2018.
Okay, so some steam coming off of this charge, and keep an eye on semiconductor stocks, particularly Micron. Matt Maley and Max Wolff, thank you for joining us.
Thank you.
Thank you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.